Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining me for this segment, we have Solomon Tesfaye. He's Chief Business Officer, Aptos Labs. We're here to discuss infrastructure, governance, and business model elements that must be in place for tokenization and on-chain payments to scale. Solomon, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
And certainly scalability, tokenization, two big themes here at SmartCon. By July of this year, Aptos, you've doubled its number of institutional integrations. Since early 2025, surpassed 540 million in tokenized real-world assets, so quite an accomplishment. Year's not over yet. Walk us through what's driving this momentum.
Well, first of all, thanks for having me. So we actually have now 1.2 billion of assets on chain, mostly driven by private credit and money market funds. And that's consistent with all the real-world assets at this point. And so we're looking for greater diversification on chain, whether it be through commodity exposure on chain, synthetic exposure to public equity. We're really looking to broaden the set of different asset classes that are available on chain. As we see more capital formation on chain, mostly driven by trading, we want people to be able to invest in and get yield or get some other diversified exposure.
I mean, that's quite incredible that it has doubled, basically since, more than doubled, basically since
right.
July. In September, Chainlink CCIP went live on Aptos. How does this integration of CCIP support the Aptos ecosystem?
So CCIP is basically Chainlink's cross-chain interoperability protocol. And so it allows for us to basically create interoperability amongst different chains. Because at the end of the day, we really want to enhance liquidity and distribution. And so this is just one incremental step towards getting to that direction.
So as we talk about tokenization and scaling on-chain payments, when you think about infrastructure, business needs, governance, and all that, how does that play into advancing these priorities?
So first of all, it requires regulatory line of sight. So of course, in the US, with the Clarity Act, the Genius Act, all these things allow for institutions to really lean in to the conversations. And then aside from that, of course, partnering with the right regulated counterparties, whether it's counterparties that have money transmitting licenses or proper qualified custodians and whatnot. And then, of course, partnering with distribution channels that can actually allow for this to scale appropriately. And then, of course, given Aptos's unique properties in terms of being the fastest, lowest cost blockchain, really thrive with high volume applications like money movement.
Yeah. So how do you see the payment infrastructure use cases evolving in the next 12 to 18 months? What are some benchmarks you're going to be looking for? How would you measure success? Especially when you're thinking about those larger scale payment flows.
So last month, we traded about 60 billion of stablecoins on chain. A lot of that, well, at least above 50%, is really driven by trading. That's consistent with any of the larger blockchains. We're really looking for diversification of use cases, whether it's remittance, microfinancing, cross-border transactions, such as B2B transactions. So really, we're focused on what are the metrics, what is the volume, and within those particular use cases.
Right. Appreciate the insight, Solomon. Thanks for joining us on Trade Talks. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.